Welcome to Beanstalk, M&J's podcast where we are sharing and showcasing our areas of expertise through conversations with practice leaders on their knowledge and experience. We trust banks with our life savings, with our identities, and with our futures. But in a world full of identity theft and money laundering and complex financial rules, what really keeps our money safe and keeps us informed about our financial services? Well, it's a complex and intricate web of a lot of different regulations that banks follow. And we have specialist experts at Mauldin Jenkins who work with leaders of financial institutions to help navigate that web of complex regulations. And I'm very excited today to be joined by the practice leader of that service segment, Emily Dent. Hey, Emily.
Good morning.
So, Emily, do a favor for our audience and just tell me a little bit about your background and your role at Mauldin Jenkins.
Sure. So, in college, I started my career working with financial institutions in various areas and continued that after college, then decided about 10 years in to go back and get an accounting degree so that I could work with financial institutions from the outside. I audited financial statements and performed internal operational audits originally when I started with the firm, and then eventually moved or segued into the Compliance and Bank Secrecy Act area so that I could help grow that service for our clients and really round out what we offer our financial institution clients. It's a hot area, always requires a lot of attention, and the regulators are very detailed in the examinations. So we wanted to make sure at Mauldin Jenkins that we are offering every angle, every service that we can to our financial institutions.
So you really have that kind of full view then. You've been both on the side of the financial institution and of the credit union, and then now we're on the side of being that expert advisor working with lots of different financial institutions and credit unions, and also just leading the practice for, like you were just saying, we have a wide range of different services to kind of be that overarching thing. So you have that full view. So I'm really happy that you could spend time with me today to talk through this topic. You're going to be wonderful to chat with. And so before we get too much into it, though, will you just kind of give me an overarching view of like what kind of services does your team offer? What kind of compliance challenges do you help financial institutions navigate?
It's a wide variety, really. Our entire team has a background working for financial institutions and also with financial institutions, as some have been auditors previously, gone back into industry for a little bit, and have then joined Mauldin Jenkins. Our team really partners with our clients, our financial institution clients, to help not just test their transactions, their policies, their training, their overarching compliance management system, but also to provide expert advice, some guidance on the more difficult, complex areas of regulations. Consumer regulations are tricky. Mm-hmm. They're very detailed. There's nuances. They're gray, and some are a little more black and white than others, but we really try to help our clients navigate through those areas to make sure that they are covering their responsibilities to our consumers, to our commercial customers where necessary or needed, and also then to help them navigate and stay out of trouble with the regulatory world as well, as they are heavily audited or examined by federal regulators.
And I, in the intro, kind of, laid this out as, financial institutions are having to navigate like a really intricate and complex web of regulations. Is that a fair assessment?
Absolutely.
Okay, perfect. I didn't want to be too embellishing or anything. It just feels like when you look at the different industries and sectors, like financial institutions, they have some of the most have to navigate. So, well, just kind of give me some examples. Like when I say banks are regulated, like what kind of regulations do they have to navigate? Like, what are we talking about?
There's loan compliance regulations, deposit compliance regulations, and those really are very specific to the types of disclosures that financial institutions have to provide to consumers, generally and primarily to consumers. However, there are bits and pieces of the regulations that also cover the commercial or business transactions as well. The regulations are designed for protection of the customer. They're not really designed necessarily to help the financial institutions as much as they are to protect the customer, make sure that the individuals and businesses understand the products and services that are being offered to them. What do those features look like? What's the cost to them to do business with a financial institution? And what is the benefit? All of this is extremely important and very complicated for banks to ensure, and credit unions to ensure, that they are providing the level of detail that is required by the regulation, but also in a way that it can be understood by the consumer as well. Clear and conspicuous is one of the favorite phrases in regulatory law.
Yeah, because like when I look at the capabilities of you and your team and the type of regulations y'all help financial institutions with, it always strikes me that it seems like they've used the entire alphabet, right? Everything, like they've gotten past the regulations X and Z, so they had to move to double letters.
Yes.
Now there's the CC and the GG. So just like, I guess, tell me too, when it comes to that, it's not just the regulations they're having to navigate, but like there are examination implications to these too, right? Like someone's coming to look over their shoulder to make sure that they're doing what they're supposed to be doing.
Of course, yes. So depending on who the federal regulator is for a financial institution, there will be different examinations. There's a safety and soundness examination. The Bank Secrecy Act usually accompanies the safety and soundness. If you are a nationally chartered financial institution and are regulated by the OCC or the NCUA, then your compliance examination for those loan and deposit regulations will generally go along with your safety and soundness exam. If you're state chartered, on the other hand, and your primary federal regulator is the FDIC, your consumer compliance examination and your fair lending exam are going to be separate from safety and soundness. The exams are very detailed. There is a significant amount of documentation that is provided following a fairly lengthy questionnaire and probably phone interviews as well with the examiners prior to the start of the exam. So a lot goes into not just preparing for the exam, but really ensuring along the way that the bank is following the regulations as stipulated by law, and that they're treating their customers, their consumers, fairly.
Well, and it does kind of strike me that when it comes to institutions like this that have so much to try and keep track of, they probably need some kind of like a framework to help them navigate all this, right? Like a compliance system or something like that. Is that something that you also help with? Is just not just helping them understand which regulations apply to them, but also understand them just how to build the processes to be able to navigate this complex world.
Yes. Compliance management systems are imperative. They built from scratch, they can seem a little daunting, but when you take it step by step, it's a little easier to digest, just like an elephant. They say, how do you eat an elephant? One bite at a time. How do you set up a compliance management system, or as we refer to as a CMS? Is you have to break it down. It's policies and procedures. It's board and management oversight. It's internal monitoring. It's your third-party audits. And we actually can help with all of those areas. It's setting up risk assessments to really even help you identify what those areas of risk are that you need to focus on. So we at Mauldin Jenkins help with all of these areas. And it's really a passion for our team. I think you have to be passionate about compliance to do the work, as it's not easy.
And not only is this a complex regulatory environment, but it also feels like it's kind of shifting and changing in time too. Can you tell me a little bit about just what is impacting the environment? What is changing? What are financial institutions having to navigate?
Wow. So much. It seems since COVID, really, there's been a significant change, almost a little bit of a roller coaster ride with financial institutions and the regulatory environment that we're in. Of course, since COVID, we have changed administrations and changed administrations again. So, that absolutely impacts the requirements. And under our current administration, there have been several executive orders that have really led us to see some change in the examination manuals and the exam process and focus, from reputation risk being removed from the exam manuals to disparate impact being removed from the exam manuals. These are areas that we have had significant focus on, not just from the examiner's side, but also from the audit side to help financial institutions navigate that and ensure that they're remaining compliant in those areas in the past. So, these changing regulations, kind of a de-risking or a deregulation of sorts, has absolutely been different for us, for sure.
Well, that's because you mentioned the reputational risk and changes in language and examination manuals, and that ties into like the fair access changes, right? Because that's where I know when it comes to just certain industries that do seem a little higher risk. I'm thinking like cryptocurrency and things like that. Maybe cannabis businesses that banks were often kind of hesitant to potentially working with higher risk industries. I guess with these new rules and changes in examination manuals, are you finding that financial institutions are looking more to work with these types of businesses with, say, for example, a cryptocurrency company?
Absolutely. I think as financial institutions get more comfortable with the technology and with the change in environment, they are more open to offering products and services to these types of areas. Now, I will say with the fair access, and the open banking concept, that really has centered also around other types of industries such as firearms and energy, driven by political views and value systems and things like that, which is really what that executive order is trying to remove from the banking area, so that banking products and services are being offered to everybody equally and fairly.
So don't necessarily just write off an entire industry just because it's maybe thought of globally as one way or another, just whatever kind of people are thinking of today, but just let financial institutions look at a relationship as a relationship and
Correct.
kind of make a decision for themselves.
Absolutely. And, the other important thing to remember is here in the Southeast, at least the southeastern region of the country that Mauldin Jenkins has worked in for over 100 years. The community banks and the community credit unions have really done a great job of serving their consumers and their businesses in their areas. It is, community banking is absolutely a passion, whether that be a credit union or a bank. It's absolutely a passion. It is giving back to the area that you live in and to the people that you go to church with and you go to school with and that your children play with and you live next door to, and so I think really we haven't seen a significant change necessarily in the Southeastern area as far as the types of businesses that we're willing to bank. However, again, on that crypto side and from a cannabis perspective, as those areas become more comfortable to us and we learn more about them, we are absolutely seeing institutions opening different types of products or services so that they can help those industries really grow and and from a financial perspective.
Yeah. And I think I saw too that when it comes to some of the potential changes, there was also some things related to fair lending. Can you tell me a little bit about what that's all about?
So in April of 2025, another executive order was issued. Actually, that was the first one prior to the reputational risk executive order that was issued in August of 2025. The April executive order was in regards to disparate impact. And disparate impact is a little more subjective. So it does have to do with fair lending, and really, I think overall, banking in general, making sure that institutions are not just tailoring products and services to a certain demographic, but that they are making services available to all demographics, regardless of race, religion, gender, these types of things. And there has been in the past a significant focus on that more subjective side, which can lead to lawsuits, and other regulatory ramifications that have been difficult for financial institutions to navigate. So with the removal of disparate impact liability from the exam manual and the examination process, really the goal is to shift focus really to more intentional discrimination when it comes to the fair lending exam. Looking at financial institutions and what are their actual policies and procedures and how are they really lending and what are the merits that they're looking at from a financial perspective rather than looking for statistical disparities. So aside from reducing the potential liability of lawsuits, the purpose of the order really is to allow financial institutions to make policies and lending decisions based on objective, measurable financial criteria without being pressured to manage their customer base to achieve a specific demographic outcome or to avoid legal liability.
So when it comes to these changes in areas like fair access and fair lending, are we anticipating that these are going to really have any impacts on kind of a bank's operations?
While the changes are absolutely concrete and have been made to the exam manual and the examination process, we can't forget that these came about through executive order. Executive orders can be reversed. They can be modified. So we really need to make sure we're remembering that and looking forward to the future, being more forward thinking, not necessarily present moment, because the exam cycles may extend into a new administration that could potentially reverse these current executive orders. Additionally, just because we've changed the exam manuals and the potential examination processes, it doesn't necessarily mean that the law itself has changed. The Fair Housing Act, different state level statutes and consumer protection laws, as well as Equal Credit Opportunity Act, which we often refer to as ECOA. These laws have not changed at the present moment. ECOA is, potentially in the process of changing, but yet there is not a proposed rule that has been published at this point.
So I like how you phrased it earlier too, when I was asking about, working in different segments or sectors that might be considered higher risk, like a cryptocurrency. And you're kind of describing, to a lot of ways, it's just as we as an institution are more knowledgeable and more comfortable about it, then, we can have a little bit more confidence going forward with those relationships in our community. And it kind of sounds like that just rings true from your perspective, operationally, generally. Let's not race to change a lot of things. Let's just keep on doing what we're comfortable with, what's in our risk tolerance. Let's not start planning short term Let's still
Right.
plan long term and kind of know that these are the specifics we're navigating right now. Understand that like most regulations, especially executive orders, they can change. But so it's nice to know kind of just what has changed, how the language changed, how it's impacting examination modules. But I like that view of maybe we have a good CMS. Emily helped us develop a good CMS. Let's stick to that CMS, right? But I do wonder though, I kind of get the sense that there is some deregulation happening. Like, can I scale back a little bit?
It seems like it, but really just the opposite, I would say, personally, from my experience. The FDIC in November of 2025 published a financial institutions letter in which they informed banks that the examination cycle for consumer compliance and fair lending exams is going to be elongated based on size of your institution, the last consumer compliance and fair lending examination, your CRA exam results, those types of things. And that has already been changed in the exam manual. It is already in place and in practice. And so with an elongated time period between examinations, it actually means really we need more robust compliance management systems. If we don't have more robust systems and things slip through the cracks, there is potential for significant ramifications. You've got restitution that may have to be paid to consumers or commercial clients, customers as well. You've got the potential for reimbursement of fees if they're charged and not in line with regulatory compliance or what was disclosed to a consumer at the time a loan was originated, an account was opened, those types of things. And so you really have to have a strong program. You've got to make sure that you are looking at these areas, that you're testing transactions, that your disclosures and your statements, your periodic statements have accurate, clear information so that your consumers can really understand, what it is that they're participating in with their financial institution. And so in the event that you scale back, first of all, I think your examiners may, and I don't want to speak for any particular examiner or agency, but they may question that. Why are you scaling back? Consumer harm is still something that they are looking at.
Well, and that makes sense because I even realized too after asking the question, like I'm just not even framing compliance. Like as soon as I hear deregulation, like, ooh, can I start to save money on compliance? But the thing is, like, I still want to do the right things.
Absolutely.
I still want to be good by my customers. I still want to keep their data safe and make sure I'm doing lending fairly and working with the same businesses and all that. And I guess something too is sometimes I accidentally start thinking of just like compliance as a cost center. And then from this conversation I'm getting, I need to just like not even think of it that way, right?
Right. Because really, and the way I like to look at it, and somebody said this to me at a compliance conference recently, actually, we are revenue protectors. And, because we do a lot of times, especially boards and audit committees and the C-suite, think of compliance and BSA as just that, as a cost center. But really, our goal is to not just protect our consumers, and as community banks want to treat our customers fairly because we live, work, worship, go to school, church, all those things with these individuals and these people that own businesses. But also we are trying to protect the bank and the credit union and make sure that we aren't paying civil monetary penalties for violations, and that we're not having large amounts of restitution and reimbursements that we're having to pay back to consumers. And so therefore, again, that system, that compliance management system, it has to be strong. It has to be working properly. So really, now is not the time, if ever, to draw back on those resources.
Well, I needed that. I needed that paradigm realignment because that makes perfect sense. That's absolutely how we need to be thinking about it. But, I do also like to sometimes think about, technology. How can we use more, newer or emerging technologies to help us just do what we need to do, not cut back at all, but just maybe be a little bit more efficient in the approach. Are you seeing any trends or considerations right now, or even just conversations about like AI? How when we're looking at our CMS systems, can we bring in like AI? But both, I'm interested from both sides of the coin, both to help us, but also what are other risks that introduces to us? I guess, how is AI being talked about from the realm of like bank compliance?
I think, honestly, banking is going to look really different in the next 5 years. AI is being used not just on product and service offerings to our customers, but also from the perspective of it's helping us monitor. It's helping us perform routine tasks. It can help populate risk assessments and analyze large amounts of data all at one time. Now, we have to be careful with AI, of course. AI is it's ever changing. It's always improving, but it's improving from machine learning. It's improving from inputs. It pulls information from a lot of different areas, public data, right? Third parties that have allowed access to their information, all of these different areas. So we've got to be careful that we know what is going into that AI information that's being produced back to us or provided back to us. We've got to make sure that information is actually accurate. We've got to validate it.
Yeah, that makes sense, because especially too, you think about AI and technologies like that. They're very data-driven technologies. They're fueled by data. Data is like the jet fuel that powers them. And we're in a regulatory environment where we have a lot of data protections we need to manage and monitor, So it makes total sense that both the data going in to fuel the systems and their outputs, we need to be mindful of that, but also just should we make certain types of data eligible to those systems? So I like that you point out the risks we need to navigate too.
Oh, for sure.
That's always the case, but I could definitely see the space like this where that needs, special concern.
Well, because every AI platform isn't necessarily encompassed just within your institution. And we've got to remember that as well. Mm-hmm. So ChatGPT, for instance, that information is being, I don't like the word regurgitated necessarily, but really it's being shared back out into the world, and we have to make sure that if we are using AI, it is AI that is secure within our institution. We don't want to provide any information into a system that could potentially be sent back out into the world.
Yeah, because that's where, when it comes to AI, obviously security and data governance are key for every enterprise getting into AI, but here it just seems to have even higher stakes for financial institutions.
Oh, absolutely.
So that makes sense.
And most of our financial institutions really have not started using AI platforms necessarily on the consumer regulatory compliance side as much, unless it's for, helping develop policies, procedures, maybe, populating, like I said, those risk assessments, or looking at large data sets of information. Where we really see AI being used is within a couple of things, honestly. It's machine learning systems are being utilized for automated underwriting, automated lending software. And then also with our Bank Secrecy Act, we have to perform ongoing monitoring and due diligence reviews, not just on our customers, but also on the transactions that go through their accounts and through our financial institutions, right? So we also have to we also are using that software. It's called anti-money laundering software programs. And that is very much AI driven.
Are there any other, considerations that institutions need to have, when looking into AI models?
Yes, just like any other type of model that we use at a financial institution, interest rate risk models, credit loss models, those types of things, we need to understand what goes into that model. What information is used, what does the analysis of that information and that data look like? Examiners' expectation is that we understand not just, we don't just input data and take the results and go with it. We've got to really truly understand what's going into those, both with that automated lending, what information is used to make those decisions. Are we ensuring that it's not going to be discriminatory, in any way? But then also, what do the algorithms look like within our AML software that we're using to monitor from a BSA perspective? What information is being analyzed, and how is the system determining whether something is unusual or suspicious activity?
And real quick too, you were just mentioning about, a BSA and AML. Let's double click on that for a minute. Throughout this conversation, we've been talking about, shifting focus areas, and then even earlier, the discussion of safety and soundness examinations. I guess, is anything changing with respect to BSA and AML, or is that continue to be a focus area? Is it stepping back and other areas are taking more of a priority? What are you kind of seeing in that space?
Well, BSA has been a significant focus of examinations in recent years, and I don't see that changing. Of course, yes, we still see, safety and soundness exams that are focusing on credit quality, especially with changes in the economy. Interest rate risk and liquidity are also very important. Internal controls have been a huge focus of exams that we've seen in the last couple of years. But BSA, with all of the heightened level of fraud and the financial schemes and money laundering, and these things are not getting better. They're not decreasing. So we continue to see those trending upward. As a result, I don't think you can back off on the BSA examinations, because financial institutions play an integral part of helping law enforcement, keep our country safe and monitoring for that money laundering, that drug trafficking, the level of illicit financial activity that occurs is, again, it just continues to get worse every year.
Yes, that makes me remember that, like, I need to constantly remind myself that I'm doing these things for a reason, that they have a good purpose to them. And, I got, stay the course. And again, we have that good CMS. We're maintaining compliance with these because it's a good idea to. And at the end of the day, we're working to keep our consumers and customers safe. The last thing I wanted to pick your brain about was beneficial ownership information. I feel like for a while there, we were talking a lot about that. I guess where does that kind of stand from an FI perspective when it comes to that BOI area?
So beneficial ownership information and corporate transparency is another one of those areas that we've kind of seen a little bit of a seesaw back and forth the last couple of years, right? FinCEN passed a final rule back in 2022 related to corporate transparency and beneficial ownership information that has since been rescinded. That rule actually changed and was overridden. And now, rather than having to report that information for all types of entities within the country, it only applies to entities that are international, unless there's some other exemption that entity would fall under. Domestic entities at this present moment are not being required to register with FinCEN for BOI under corporate transparency.
Okay, that makes sense. But I guess so what's the implication on banks? I guess, so why are banks still asking for that information? They still have to be collecting it?
They do. And since 2018, May of 2018, the beneficial ownership rule was effective. And it's actually different than corporate transparency. So still, even though under the Corporate Transparency Act, prior to it being amended, or the rule changed, I should say, domestic and international corporations and entities were going to have to register with FinCEN, but also still provide other types of information to their financial institutions when new accounts are opened or products or services are changed. That information and that requirement for financial institutions to collect is not changing. So we still have to make sure that business owners and other types of entities, nonprofit entities, are prepared to provide the detail for beneficial owners of their entities, and including that individual who is what we call the control prong. And the control prong is the person or persons that have ultimate responsibility for making decisions or can perform the financial transactions at the institution. We're still required as banks and credit unions to collect that data.
That makes sense. So from my perspective, from my institution, I'm just going to stay the course and do what I've been doing.
Absolutely. And our businesses, and our nonprofits and our, government entities also have to make sure that they're providing that information as well and prepared to do so.
So, Emily, this conversation's been a lot of fun and very enlightening. We've covered a lot of different aspects of compliance and for financial institutions, and even just operational realities and ways to do it better, faster, stronger. But kind of leaving this conversation, one last ask of you is what's one thing you would really stress for leaders of financial institutions, for senior management, for board members, just something for them to really keep focus on?
So with the roller coaster we have all been experiencing the last few years, and rules that have been proposed, rules and final rules that have been rescinded because they weren't yet effective, and our new administration, took office. Just keep in mind, again, that forward thinking. Don't take for granted that these changes may last forever, and really make sure that you're providing support, you're providing resources to your BSA department, to your compliance and risk officers, making sure that we maintain that healthy compliance management system. Ultimately, it's going to be what keeps our financial institutions safe. And again, our focus as community banks and community credit unions, it's our communities again, and we want to help them. We're there to help, the individuals and the businesses in our areas.
Perfect. Well, Emily, thank you so much for joining me on the microphone. Thanks. I had a great time. I hope you also enjoyed it. And thank you so much to our listeners for tuning in. For anybody who has follow-up questions about the financial considerations and priorities we discussed today, or any other business considerations you're navigating, please don't hesitate to contact us at www.mjcpa.com.